mixture there, so it'll be a good discussion. Stock of the day, I thought I'd pick up. I think it's been a favourite of Henry's for quite some time. Karoon Energy, it is in our fantasy portfolio here on the call. It's Boana, I think that's how you pronounce it, field in Brazil. An update today, production 62% higher for the quarter, taking total production to 3.37 million barrels. Karoon says production benefited from the successful Boana intervention campaign. The average net realised oil price 15% lower than in the prior quarter, in line with the decline in global oil prices. Henry, Karoon, I think, is a bit of a favourite of yours in the oil sector, isn't it? What did you think of the production update?
Yes, Koshy, it is a favourite of mine. I'd have gone for Bouna, to be honest.
Okay.
But you're obviously far better travelled than I am in terms of South America.
Not at all. I'll go with Bouna.
I've never been to Brazil.
This is your stock.
It is my stock. I followed this one for a long time, since they were a cash box, since they actually bought this asset, which is a producing asset from Petronas in Brazil. A good update from the company, good reserve upgrade there, and drilling to come as well. But the only problem I don't like about Karoon is the share price at the moment, because it has tickled higher. This is it gets down to about $2.10, and to be honest, there is probably a screaming buy. If it ever gets back down there, I'm going to plunge back in. The issue, I guess, is that it's hard to find mid-cap oil and gas companies of quality that are actually producers. This is a $1.3 billion company with upside, with drilling to come. It's got good oil revenue as well. It's got permits now. Things are starting to happen again. I think this one has got good upside, but as I say, it's popped a little bit, which is frustrating in some respects. $2.10, $2.15 is a far better price to get set in this one, but the management has been good. It is quality, and as I say, there's not many to choose from when you start casting an eye around in that $1 to $2 billion price range for market cap that have the quality that these guys have. One thing to bear in mind, though, with Karoon, and it's something that they have had to do over the years, is they do hedge some of their production. So they do hedge the price of some of their production, and that's certainly something they allude to. They do it through a clever method, if you like. They do it through put and call options. They usually buy a put to protect the downside on the oil price, and sell a call against that to pay for it effectively, which is quite a common option strategy. But it does limit the upside to some extent on the oil price, but also it does limit the downside as well. So they're going to be revisiting that hedging strategy in the first quarter of the year. They do a look at how they're going to hedge things, but that is something to bear in mind. So when the oil price goes nuts, they may not be getting the full benefit of the nutness of the oil price. So that's something to bear in mind.
That's a new technical term.
It is the nutness.
Yeah, but so what are you saying? Are you saying sell at these levels and take a profit?
No, here they're a hold. $2.10 to $2.15, they're a screaming buy. If they got to $2.50 again, I think I'd probably be taking profits. But as I say, this is kind of a long-term stock for me. It has been very good. We did very well out of this buying around 65, 70 cents when they were just a cash box, when they were just a dream, a glimmer in an oil man's eye of buying the Brazilian assets.
Right, okay. Scott, what do you think of Karoon?
Yeah, look, the production numbers out today were excellent. I guess probably largely expected by the market, given the relatively muted share price response. So I guess we'll take that as read. But also interesting idea, as Henry said, and frankly, Henry is just a lot better than I do. He's also more comfortable with resources than I am. Koshi, our viewers will know very well that I tend to try to avoid businesses whose operational metrics are very, very hard to forecast. I don't try and play the oil price forecasting game. And so the question really, you control your operational costs, you hope to maximize your volumes, and then you wake up every morning and notwithstanding the put and call strategy, as Henry said, and say, what price am I getting, or what price can I hedge? Those are kind of the same conversations. Of course, the latter gives you much more certainty and much more ability to forecast that sort of short to medium term value, and therefore profit. But the next contract, the contract after that, both the price of that and the potential realized oil price remain very, very difficult to see. So look, am not a fan of resources stocks. Generally, you guys know that. It's not going to change today. For anyone who was hoping maybe finally I'd crack, that day is not going to be today. I wouldn't own it because I don't think I can forecast the future well enough to own Karoon. So I don't think it's necessarily any worse than any others. And to Henry's point, in this space at that size, it's absolutely one of the better players. So if you're looking for something in this space of a similar size with that sort of upside potential, notwithstanding the lack of nutness, as Henry's put out, I'm writing that one down. Then I think it's very, very worthwhile. If you've got to the point of saying either I think I can forecast the oil price or I can't, but I want to buy it anyway, then I wouldn't blame the owner for doing so. But I wouldn't be buying it. Probably a solid hold, mate. Look, if I owned it, I would sell. If someone gave me the shares, I'd probably sell them and do something else.
Right.
But no clear rationale for selling at this price.
So let me ask you: has your will against resource stocks been tested in the last 12 months? Because you look at the list of the top 20 performers on the share market last year, they were all resource and energy stocks. Every single one of them.
Yeah, not only that, the energy sector was up by about 34% last year in a market that was down. I think the next best sector was up single digits and tech was down by a third, for example. So massive range of outcomes there. No is the answer because I don't know what happens next. There are times when the oil price is great, times when it's bad. If people can play that game, I have no issue with them doing so. I just look at that and go, I don't know, what's the oil price going to be tomorrow, next week, next year? Literally no idea, mate. So in that case, I'd really just rather say, you know what, I want to go and look for ideas for whom I have a greater degree of confidence or certainty. There's never absolute certainty, of course, in anything, but I just handicap my odds differently. So honestly, do I wish I'd got those returns? Absolutely. But if you look back further than that, you see times when oil underperforms, energy underperforms. That's just the way these things go. Right. And largely it is an oil price question. So war in Ukraine, limited supply chain disruptions coming back or disruptions going away, supply chains coming back on stream. It was a very, very good time for energy stocks, and good luck to everyone who owns them. No criticism, no grief from me. A little of envy maybe, but that's about all. I would like those returns, but no, so there are stocks that go up, mate. And you look at it and go, either I didn't know it was going to go up, or some cases that's crazy that it's gone up that high. I'm not talking about Karoon here, just in general. And you kind of go, do I wish I had those returns? Yes. Do I feel like I could have reasonably assessed the chance of doing well in that sector at that point? Maybe. But broadly sticking to my knitting has been a better strategy over the long